5 money things you must do before 2025 ends. And every year I have to do this video is to remind people that there are some things that they really must do this year before 31st. Otherwise, next year, some things will expire, some things will go wasted. So you must watch this video by the end of the year. The first very important thing that I want everyone to remember is to use up your CDC voucher, which are expiring by 31st December 2025. And it's very important to use it because whether you receive the CDC voucher on January batch or May batch, okay, January you receive $300, right? And then May, there was another CDC batch of vouchers that are $500. They will all expire on 31st December. So you only have around 1 month left to redeem all your CDC vouchers. Make sure you use them. Okay, CDC vouchers are usually like split to half, 50% supermarket, 50% hawker stores, and small provision shops or wet market retailers. And CBC is your entitlement to spend, so don't feel paiseh when you're using CDC to pay. And I'm very sure some of you may have a few hundreds, don't know where to spend on. Supermarket is quite easy, right? If you really don't know what to spend on, you can buy some big ticket electronic items from Fair Price Extra or Giants. But what about the other hawker center stores or small provision shops? Where else can you spend your CDC voucher? I've seen people spend it on haircuts, salons. I've also seen people spend it on some mobile retailer shops where they repair their handphone, or some of them can use it to buy iPhone. Now, whether you consider all these expenses essential or not, I am not here to judge. I'm just here to tell you that you really need to use it. Otherwise, it will really be burnt, or you can just donate away to charity of your choice if you prefer. But I also want to put out a point that don't mistake the CDC voucher versus the SG60 voucher. Alright, the SG60 voucher is something different. It will only expire on the 31st of December 2026, and every Singaporean citizen will receive the SG60 voucher. But for CDC voucher, each household only one CDC voucher. So if you are a child living with your parents, please don't use your own NRIC or SingPass to redeem the CDC voucher. Use your parents' NRIC if you are intending to move out within the next few days, because only one person in the household can go and redeem the CDC and then can share the link among the family members. But if you have used up your name for one address, you cannot use it for another address. Then for SG60 vouchers, don't worry, they will only expire by the end of next year. Okay, but I always say that you need to use it sparingly, okay? Don't like the first 11 months of the year never use, then the final month, December, then you go and scramble on where are the CDC merchants where can I use it? Okay, don't kanjiong, okay? Use it sparingly, okay? Across the 12 months, spread it out evenly. Which brings me to the point that you also need to join the Honey Money SG Telegram group of over 22,000 members, because that's where we share the best deals, like all these CDC announcements. You need to know first, right? So join us at Honey Money SG. It's free. Go and join. The second money thing that you should do before 2025 ends is to consider whether you want to contribute to SRS, Supplementary Retirement Scheme. And I don't care whether you want to invest a huge amount or lump sum, but you just start to contribute $1 to your SRS first if you don't even have an SRS account. Because the fact is that by contributing $1 to open your SRS account with any of our top 3 banks, DBS, OCBC, UOB, you will lock in the statutory retirement age, which is currently at 63 years old. Okay, by the future, when they raise the statutory retirement age, whether to 64 or 65, you would have missed the boat. And then you will remember this video saying, I told you to contribute $1 to SRS. But to put it short, if you earn above a certain high income bracket, it makes total sense because it is guaranteed savings, right? You are saving from the tax and you are deferring this tax expense to a future you, so that the future you can pay at a lower tax rate, because only 50% of SRS withdrawals are taxed. And if you understand inflation, future money will be worth less than current money, right? Time value of money. So if you want to contribute to SRS to offset your this year 2025 annual income, you need to do so by 31st December 2025. And for Singaporeans and PRs, our SRS contribution limit is $15,300 per year. For foreigners, you have a higher cap of $30,000. So make use of whatever is beneficial to your own situation. And if you really don't know what to invest, right, you contribute this year first, okay? Then you slowly learn, because you want to offset your tax expense first, Then the next few months, you go and read up, watch my videos, then you can think of how you want to invest your SRS. And there are a lot of things that you can invest through your SRS, like ETS, like SSBs, T-bills. unit trust. And I want to make it very clear that what I invest with my SRS is different from what I invest with cash. For cash investments, how does 10% per annum sound? Because this is my last call for the USmart Money Market Fund promotion for 4th quarter 2025. And it's going to last till 31st of December, where you can earn 10% per annum for 30 days on up to 5,000 Singapore dollars of subscription. To be clear, it is only valid for new USmart users or existing users who have not made any prior deposits. So how to join this promotion is really simple. Sign up for a USmart account using my affiliate link, deposit funds, and subscribe a minimum of $2,000, a max of $5,000 to the Maybank Money Market Fund on the USmart app, and hold it for 30 days to qualify. The reward will then be credited by the 10 business day of the next month. Now, let me remind you that this is also one of the things that you should do before the end of 2025 because you only have a few weeks left to the end of the year. So sign up for a USmart account using my link below or scan the QR code here so that you can participate in this promo before it ends. Next money thing to do before year end, very important, and that is CPF top up. Okay, I'm not talking about the mandatory contributions of CPF that is through your employer-employee nature, or for self-employed that is mandatory for your MediSave, but I'm talking about the voluntary top-ups. So if you're doing top-up to your SA, it's known as retirement sum top-up, RSTU, and if you're contributing to your MA, that's called VCMA, voluntary contribution to MA. And for the tax relief cap, it is a combined cap of $8,000 per year. So whether you want to split it half, 4,000 SA, 4,000 MA, or you just want to all in the MA MediSave account, that's also possible. But remember, the cap is $8,000 combined cap. So similar to SRS, if you contribute by 31st December 2025, it will offset part of your taxable income for 2025. Even if you contribute on 1st Jan 2026, it will not backdate, okay? Because you cannot turn back time. You cannot turn back one whole year earlier. If you contribute on 1st January, it will be for the year of 2026 income. So some of you may consider what's the difference between SRS and CPF. So SRS, I mentioned, right, once you contribute to SRS, it only earns very little interest, 0.05%. You will need to invest it. Whereas for CPF, if you top up either your SA special account or MediSave account, you will earn a base rate of 4% annual interest. And that is very good for some of you, right? Because bank accounts are giving us what? 2% annual interest now and still decreasing. So 4% is actually very good and guaranteed by the government. So you think of CPF top-ups as a two advantage tool. One is to reduce your taxable income. Second is to get some guaranteed interest rate from the government. Government give you money, you take or not? You take, right? Yeah, but some people don't like the CPF system lah. I can also understand, which is why they prefer to invest themselves. And by contributing to CPF, you are also building your late stage retirement funds, especially when you can start receiving CPF life payouts from 65 onwards. So it's not really a bad thing. You cannot use the money now, that is true. Okay, it's locked up in liquidity, so you have the liquidity risk or whatnot. But you think of it as you're trying to lay the bricks for your late stage, the late end game of the retirement life. You don't need the early part. The early part can be settled by cash, whereas you're just building up this CPF thing. Okay, I've been talking a lot about CPF content, so you can check out my CPF related playlist. Alright, fourth money thing that you should consider to do is donations, especially if you're doing it for the tax benefit. Because if you were to donate to a community chest or IPC, Institute of Public Character, you can stand to get some tax benefits. Like if you make your donation by 31st December 2025, it will offset part of your taxable income of 2025. And for every $1 that you donate, you will get back $2.50 of tax deduction. So if you donate $1,000, you'll get $2,500 of tax deduction. And everything is automatic. You don't have to report anything. The IPC will provide the statistics to IRAS, so it will automatically be reflected in your IRAS statement. But I want to be very clear that this 250% tax deduction is not an offset of your tax expense, okay? Because of how our tax rules work. It just reduces your taxable income depending on your income tax bracket. In terms of total cash flow, there is still negative cash flow. Okay, I will not go too deep into a specific, but for people who want to donate for a good cause, it's good on you. But if you want to donate just because you want to get some tax benefit and you want to have a lower effective tax, that is not going to happen. Like I always say, you donate because you want to donate. You don't donate just because you want to enjoy some tax benefit. Tax benefit is just some icing on top of the cake. Alright, so for those of you who can donate and have done so, congratulations and thank you for your contribution. The fifth and final money thing to do by 31st December 2025 is to make use of the SkillsFuture credits. Because I'm very sure most of you have forgotten that there was a one-time $500 top-up by the government in the year of 2020 to really encourage people to make use of their SkillsFuture credit, whether to go for courses or to upskill themselves or just to learn a new skill. This one-time $5 credit will expire by 31st December 2025. But just to be clear, the opening credit of $500 do not expire, so it's a different batch. And there's also a mid-career credit of $4,000 which also do not expire. So you treat it as government give you free $500 training credits to upskill yourself, whether you want to advance in your job or you want to carve out a side hustle or you generally just want to learn something new outside of what you usually do. I think that's all beneficial. So you can scroll through the SkillsFuture website to see which kind of courses or training is suitable for you. Okay, they have a whitelist. You just go and see which one is suitable for you. Make sure you spend that $500, otherwise it's going to burn. So this is my list of the 5 money things to do before 2025 ends. And it's not an exhaustive list. It's just all those who have a hard deadline of 31st December 2025. And many of it are relating to government stuff, right? Because there should always be an expiry date. Otherwise, people will not kanchong to use up. Okay, they will just drag and procrastinate. Lastly, I just want to remind you to take a break during this holiday season and enjoy life. And some of the best things in life are free. Just like you can win a 2-day 1-night staycation at the Equarius Ocean Suite with USmart. How to win? Make sure you make at least one successful trade this month, maintain a minimum of $2,000 AUM, and you can get entries to the month's lucky draw. Each month, one lucky winner gets a 2-day 1-night stay at Resorts World Sentosa Equarius Ocean Suites. So full details and terms and conditions are linked below. Go and check it out with USmart. Hopefully, this has helped reminded some of you don't waste the credits, especially those that are expiring. And if you're also interested about CPF, like what should we even contribute, I will provide you a CPF related video resource that you can check it out in this video right here.